Welcome students. Today we will be continuing with chapter 6 as done in the last class, that is cash flow statement. In the last class we have discussed cash from operating activity, and today we will be discussing investing, financing and some important points along with full-fledged questions. So, let us start with format of cash from investing activity. Now, investing activity means dealing with all these assets, investment and all that. So, if we are selling any asset or investment, the cash is coming in. If we are purchasing the asset or investment, the cash is going out. Similarly, if we are receiving any interest, rent, dividend, etc., this is all return on our investment. So, it will be added and we will take a total which we can say B. Then format of financing activity, in which we are dealing with finance part of the company, that is issue of shares or debentures, money coming in, taking of loan and mortgage loan, money coming in. Similarly, redemption of preference share and debentures, the money flowing out, and interest dividend paid on all these financing part is money going out. So, then we will arrive at the total C part. At the end we will make a total of A, B and C to arrive at cash and cash equivalent for the year, in which we will add opening balance of the cash and cash equivalent, and then we will arrive at closing balance of cash and cash equivalent. In this way, we can verify it from the question itself, because the opening balance of cash and cash equivalent as well as closing balance is given in the balance sheet. So, we can verify our solution from there also. Now, let us focus our discussion on some key issues relating to cash flow statement. To begin with operating activity first. In case of indirect method, we start with net profit or loss for the period. Since P&L account is prepared on accrual basis and not on cash basis, we have to adjust all non-cash items like depreciation, goodwill, etc. written off. As we have to calculate cash from operating activity, so we have also to adjust non-operating items like interest paid, profit or loss on sale of fixed asset, proposed dividend, etc. And one very important point, when we start with net profit, it means profit before tax, which again means it is before transfer to general reserve and proposed dividend also, because these are all done after taxes are paid. These are items of P&L appropriation. So, these have to be adjusted back in order to get net profit before interest and tax. Once we have arrived at cash flow after operating activity, then we have to adjust it for working capital changes, that is adjustment for all current asset and current liability. Now, decrease in current asset is to be added because cash is coming in. How? Let us take an example. If debtors decreased, that means cash is received from debtors. Take another example. If the stock is decreased, that means we have sold stock, which again means cash is coming in. So, let us learn one basic mantra for current asset and current liability, that is any change in current asset or current liability. If cash comes, add; if cash goes, deduct. Let us take an example of current liability also. If the creditors are decreasing, that means cash is paid to creditor. So, it should be deducted as cash goes out. Similarly, if bill payables are decreasing, that means cash is going out. Now, after all these adjustment of working capital, we have to adjust for extraordinary items. Now, what are extraordinary items? They are those items which are not part of day to day ordinary activities. These are claims, damages, compensations. If received, you add them, and if paid, deduct them. And after all this, in the end we have to deduct tax paid, as it is also part of operating activity and the money is going out. So, it has to be deducted to get cash from operating activity. Let us start with some basic questions first. Start identifying the following activities, whether they are operating, investing or financing. What is cash sale and purchase? Yes, it is an operating activity. When I will tell the activity, I will pause for a second, you think, and then I will start with the answer. Let us take the second point, cash and bank balance. Yes, it is cash and cash equivalent. Dividend paid, financing activity. Income tax refunds, yes, it is an operating activity. Short term bank deposit, again a cash equivalent. Buyback of equity share, very important, financing activity. Royalty received, yes, operating activity. Sale of shares by a financing company, yes, that is operating. Dividend received by a non-finance company, it is an investing activity. I would like to mention, if dividend is received by a financing company, it will be an operating activity. Discount offered to customers or received from suppliers, yes, it is an operating activity. Purchase of goodwill, it is an investing activity, and purchase of asset by issuing shares, it has no effect on cash flow, because one asset is coming fixed asset and shares are going fixed liability, there is no change in the cash part. So, no effect. Let us start with another question. State whether the following transactions will result in inflow, outflow or have no effect. Let us see the transaction. Issue of bonus share. This is not going to have any effect because it is just capitalization of profit. Next, cash deposited in bank, again no effect because one cash equivalent is affected and another cash equivalent is affected. So, there is no change in the end. Third point, purchase of inventory, it will be an outflow of cash because cash is going out. Sale of investment worth rupees 10,000 for 8,000. 8,000 is the inflow in investing activity and the loss 2,000 will be added in operating activity. Dividend paid, it is an outflow. Cash withdrawal from bank, it has no effect. Again, both cash equivalent part are being affected. Decrease in bill receivable, yes, it is an inflow. As I already told you, decrease in current asset is an inflow. How? When bill receivables is decreasing, that means cash is coming in, right. Increase in outstanding expenses, very important item, it is again an inflow. Now, some people can say how expenses are increasing and it is an inflow. See, we have not paid for the expenses, but we have taken the benefit, we have received the benefit without paying. So, that means it is an inflow. Redemption of preference shares at a premium, say 1 lakh preference share plus 5,000 premium. So, outflow is 1 lakh 5,000 in financing activity and that 5,000 premium on redemption will be taken in the operating activity added back because it is a non-operating activity. Purchase of building against debenture, again that has no effect because fixed asset is coming in and debentures are being issued. So, there is no cash involved in that. So, it has no effect. Now, let us concentrate our discussion on how to ascertain the missing figures for cash flow. Let us concentrate here on 4 commonly asked adjustment accounts. The first one is provision for taxation. In this, opening balance and closing balance are given in the question, and sometime we are given provision for the year, then we get cash paid, and if we are given tax paid, then we get what provision we have made. So, let us see the format. Please see, provision for taxation, opening balance on the credit side A and closing balance on the debit side B. If we are given provision for the year, that will be written on the credit side by profit and loss account, that is provision for the year, C part, and then we will get D part, that is tax paid on the debit side as a balancing figure. Now, this tax paid will be deducted from operating activity in the end, and the point of profit and loss provision for the year will be added in operating activity in non-cash items. So, either C or D will be given and the other figure can be calculated very easily. Next, on the same line, proposed dividend account is also made. Let us see the format of proposed dividend. Opening balance, yes, on the credit side A part, closing balance on the debit side, that is B part. And if you are given by P&L appropriation, that is the profit appropriated for dividend on the credit side C part, then you can get D part, that is dividend paid on the debit side. This dividend paid will be deducted from financing activity and the appropriation part will be added to arrive at net profit before tax. Please remember, if it has not been deducted from that net profit, we will not add back, but if it has been deducted, we will add back. Another very important adjustment is related to fixed asset. Now, this can be given at cost or net value with accumulated depreciation account and fixed asset disposal account. Let us see one by one. Fixed asset at cost. Opening balance we start on the debit side A part and closing balance we write on the credit side B part. Now, if some fixed asset is sold, we will write on the credit side by fixed asset disposal account. Please remember, it should be at cost. Fixed asset disposal at cost C part, and then you can arrive at D part on the debit side, that is if any asset has been purchased to bank as a balancing figure. Now, this purchase of asset will go in investing activity and it will be deducted from there. Now, we have to transfer this fixed asset disposal account on the debit side of fixed assets sold account, where we will write to fixed asset. Similarly, in accumulated depreciation account, we start with opening balance on the credit side, point number 1, closing balance on the debit side, point number 2, and the third point is whatever fixed asset has been sold, there must be some depreciation on that, and now it has gone outside the business. So, on the debit side we will write to fixed asset disposal, that is depreciation on sold asset, which will be transferred to credit side of fixed asset sold, because every entry has two aspects, one debit and one credit. If it is coming on the debit side of depreciation account, it will come on the credit side of fixed assets sold. Similarly, whatever amount you have received by selling this asset will be taken on the credit side of fixed assets sold account, that is by cash, and it will be added in investing activity. And if there is a loss, it will be on the credit side by P&L account, loss added in operating activity, and if there is a profit, it will be shown on the debit side to P&L account, and that will be deducted from operating activity. So, students, today we have discussed some basic questions and 2-3 important adjustment. In the next class, we will be continuing with fixed asset at net value along with investment and some important questions. Till then, goodbye and thank you.